All right, so just a quick good afternoon to everyone, or good morning, or good evening, depending on where you're from joining us. Thank you for joining us first, and just allow us a couple of minutes to make sure that your colleagues and all registrants have had the chance to actually log into the call, and we're gonna kick it off. Thank you so much for your patience. Patience. All right. So thank you everyone who is joining us already. The rest who will be joining us a little bit later will also not be missing a lot, since we're going to be recording this and you will have access to this recording after it ends. Myself, Charles Abu Saab from Morgan International, joined by Mr. Ian Schnoor from FMI, who I will be very shortly introducing to you. We will be taking you forward on this masterclass in financial modeling. So for those of you who joined us on the previous session, Mr. Schnoor put us through how the criteria to build a robust financial model, the different aspects of it, and a lot of tips and tricks on Excel Excel formulas and most useful and best practice formulas to be used in a financial model. This time we're going to take it a little step further and making everyone see how a properly built financial model can relate internally with all the statements, especially the three financial statements, and how to drive business decisions. So without further ado, I'm gonna move the platform towards Mr. Ian Schnoor from FMI, CEO and lead lecturers, if you want. I see some people have their hands raised. So if you have any questions, please feel free to use the Q&A. We will be addressing those as we move forward. And if you have any chat, anything to write, the chat is open for everyone. And Mr. Schnoor will definitely give you the opportunities to answer a few questions as we go and keep this interactive. So thank you so much, Mr. Schnoor. The platform is yours.
Is mine. Wow, fantastic. Well, that is great, and it's so great to be back for another webinar here with Morgan. And just want to quickly say hello to everybody in the room. Now, there was a couple comments that people couldn't hear very well, so I'm going to be looking at the chat as well. Can you all let me know if you can hear me okay? Can you give me a thumbs up? Raise your thumb, raise your hand if you can hear okay. I know that some people said that there was an echo. Is the sound okay? You can go to the chat as well. Sounds fine. Great. Thank you, Osama. Sounds okay. Beautiful. Okay. I am glad to hear that. Good. You're all good to go. Amazing. Fantastic. I'm looking over, by the way, when you see me looking over my shoulder this way, I'm looking at you. I've got a big screen here with all of your names, and it's great to see all of you. So thank you for being here today. The next thing I just want to quickly ask is how many of you, were any of you here for the last webinar I did last year? Raise your thumbs and raise your hands if anyone joined us in the last webinar that, well, I don't remember when that was. Was it November? I think it was sometime last fall. I'm going to guess we have a bunch of new people. No problem. We're going to dive into a whole bunch of fun modeling tips today and ideas on optimal modeling construction and building assumptions. And you'll see that in a second. First time here. Great. Anil, welcome to all of you. Now, there's one more question is I always love to know where exactly are you joining from because we always have such a fun global group. Um, I'm in Toronto, Canada. I just typed in mine, and I'd love to know where y'all coming from. We've got people in Dubai, Beirut, Saudi. We've got more Dubai, Lebanon, awesome. Saudi, Lebanon, awesome. All throughout Baghdad, fantastic. Egypt, amazing. I love it. Abu Dhabi, Basra, look at that. Mauritius, wow, fantastic. Incredible. Look at that. I'm just scrolling down. Cotter, fantastic. I love it. Jordan, welcome all of you. It's so great to have you all. I wish I was there where you are. It's minus 10 in Toronto right now. So I'm going to guess that you are happy that you're not here. It has been a very cold winter in Canada, and so be grateful that you're somewhere warmer. Great, but we've got people all over the world. I'm just looking over. Okay, fantastic. If you haven't met me before, very quickly, there's a screen. You can see a little bit about my background. My entire professional career has been focused on financial modeling, building financial models. I was a banker. Oops, I was an investment banker. I started and ran a training company on financial modeling, and now I head up FMI. FMI Financial Modeling Institute is the world's only financial modeling accreditation organization where candidates join us, they study and they work really hard to get through our rigorous financial modeling exams. And when someone can do that, they have tremendous, outstanding modeling skills and they're very, very proud of themselves and ready to tackle any modeling task in their job or a future job. So we hope, and we have a really great partnership with Morgan, and I hope some of you, if you're interested in modeling, and be really elevating your skills, that you really think about chatting with Morgan about joining us as a candidate. We would love to welcome you into our FMI community. Now, I am sharing my screen here, so I'm just giving me a second to set up. Hopefully you can see my Excel spreadsheet here, right? I'm just popping open a couple things here. So hopefully you can see, let me see all of your names as well. Okay, I've just cracked open on my window. I've got all of your names. I can see all of you and the chat. So you should be seeing my screen, right? Let me give you a thumbs up. Just let me know. Hopefully you're seeing my click around here. Is that working? Yeah, you'd have. Okay, fantastic. Perfetto. I love it. Ali, perfect. Great. It's clear. Good. So here's what we're going to do today. Today's webinar is called Building Robust Financial Models for Effective Decision Making. And I want to touch on the following items in our agenda. I'm going to talk about how you think about assumptions, connecting assumptions to business drivers. What does it mean? How should you really think about building assumptions? People sometimes get stuck on that. We're going to talk about a very important element in modeling, which is flow. How do you get from the very beginning to a beautiful financial model that flows really nicely from inputs to outputs? We'll talk about the three statements. Financial models are often referred to as a three-statement model, and that's because we're building a model of the income statement, cash flow statement, and the balance sheet. So I'll talk a little bit about linkages and how that works, and then kind of pulling it all together. I do want to give you a few intro comments, though, because some of you have not been here before. So we're going to start with a few intro comments. By the way, as you can hopefully already tell, I like to keep my sessions very, very interactive. So I encourage you, if you have a comment, if you have a question, if you want me to say something again, please just type it in the chat or raise your hand, and I will happily elaborate or go deeper. I'm constantly looking over at the chat because I want to make sure that it's making sense and that you're hearing me properly. So you are all here today. Actually, let me start with one more question. How many of you, I'm looking at you all right now. I'm looking at your names. How many of you have built from scratch? How many of you have built before from a blank spreadsheet from scratch a financial model of a company? How many of you have built a financial model before of a company? A few, no, right? Many are saying no. Many are saying no. No, right? I did. Okay, some did many times. Khaled said many times. Good. A few. Perfect. Well, let's dive in here and then talk about some best practices. Perfect. And talk about what we're dealing with and what is going on. By the way, have any of you been playing around? Have any of you been playing around with AI tools in Excel? Who's been using some of the new AI tools in Excel? All the agents, there are new agents crawling around everywhere that want to build your spreadsheets for you. Anyone playing around with the agent tools out there. Microsoft has an agent, Claude has an agent. Not you're trying to learn. So it's a bit of an interesting time. It's an interesting time exploring. Yeah, by the way, not yet. I'm not surprised to see that. It's very, very new, early days. If you if you are interested, I uh I am part of I'm part of a group of two other guys, and we call ourselves the Mod Squad, and we test all of the new AI tools in financial modeling. We're building financial modeling using AI tools, and so we have a whole YouTube series and a podcast series where we've been testing them. And this Friday, tomorrow, we're actually testing Claude to see how Claude can do to build a proper model. So if you go to my LinkedIn page and you scroll down, you'll see where you can find. It's called Financial Modelers Corner. Is the I'll type it in. Financial Modelers Corner is the podcast, and we are the Mod Squad, and we come on occasionally to talk about some of the AI tools in financial modeling. And so if you're interested in learning more about that, you're welcome to check it out. So, but I got to tell you, I have to tell you, having tested many, many AI tools, I have a very, very, very strong opinion at this point about your skills. I strongly believe that human skills are going to have to get better. Your skills are going to need to get better if you want to use AI. If you want to use AI to build a financial model, that's great. But you first need to understand what it means. You need to know how to build a model yourself. Because if you try to use AI to build a model and you don't know what it's doing, it's going to make mistakes and you're not going to know how to fix it, how to check it. The best users of AI are people who already have good skills, and the AI can support them to help check, to give you ideas. But you need to have strong skills. So I really hope that you can think about elevating your own skills as we get into the world of AI. So let's talk about this very, very quickly. So what is but I encourage it. I encourage AI usage, but I also encourage you to invest in yourself. Invest in yourself. People still want to talk to people. So let's talk about this. We're here to talk about financial modeling. What is a model? Well, if anyone ever said to you, what is a financial model? It's simply a forecast. It's simply a forecast. All we're talking about is building a forecast of a company's financial statements. Usually in Excel, in a spreadsheet. That's it. That's all we're doing is building a forecast. Usually 5 to 10 years is the most common range. Has anyone, can you go to the chat? Has anyone ever built a forecast longer than 10 years? Go to the chat and let me know if you have ever done any forecasting more than no. Carolyn says no. No, not more than 5. Sometimes some industry. So 5 to 10 is the most common. 5 to 10 is the most common. Yeah, 40. Mohammed, why'd you do a 40-year forecast? Mohammed said 40. 20 years for PPP, right? So some industries require longer models, like infrastructure, project finance, public-private partnership, PPP, infrastructure. Often they'll go longer than 10. Oil and gas, natural resources, mining modeling, oil and gas modeling, those often go more than 10. But the point is, doesn't really matter. It doesn't really matter. Most common is 5 to 10, but if you have to go longer, that's just, we refer to that as the model's periodicity to go out into the future, and that's fine. You can choose whatever length is appropriate. Now, the bigger question is, why are we building models? And I will tell you, there's only one reason. We are building models because financial models have become the most important decision-making tools in all of finance. The most important decisions in finance are based on financial models. So it is so important to know how to build a model. It's important to know how to check a model. If you're using AI to build a model, it's important to know, did AI build the model properly? Because it's making some very important decisions. Can you go to the chat? What kind of decisions do people make with their forecast models? Guys, can you type it in? What type of decisions do you see people making with their forecast models? Um, a great question from Ali. I'll come to that. What type of decisions do people make with their models? Yeah, investing decisions, investment decisions, right? Private equity, capital allocation. Yeah, excellent. Investment opportunities, profitability, right? Operational decisions, M&A, right? Mohammed, mergers and acquisitions, valuation. I love it. Capital structure. Let me share on my screen some of the, expansion to shrink or expand. What about this, right? Nobody mentioned credit. Oh, capital structure. Yeah, Gassan said capital structure. Sure. Sure. All of your answers are excellent. They're perfect. We make so many decisions with our models around credit decisions, loans, capital structure, investment decisions, buy or sell, research, people working in research, setting price targets, build models, people who do valuation, security analysis, mergers and acquisitions, M&A, LBO analysis, leverage buyouts, operational decisions around budgeting, headcount, marketing, understanding risk sensitivity, risk management. So the point is that there are so many decisions that people make based on their models. Yeah, IRRs, investments, I love it. There is a problem though. There's a big problem with models. But before I do that, I wanted to touch on a question, a very good question by Ali. Ali asked, if you scroll up to a minute ago, Ali asked a great question. He said, how do you account for the increase in years? Since an increase in years is often accompanied by an increase in uncertainty. Right. How do you account for the increase in years? Well, I have to tell you, Ali, it's a great question. I've worked in many industries. I've built models in many industries. I'll be perfectly honest with you. There's really not much reason to ever go beyond 10 years in a model. When people do it, the reason they do it is cultural. Certain industries, certain like to, for instance, an oil and gas or a mining company, Aramco, if Aramco was looking at building a model for an asset, often oil and gas companies like to model until the end of the mine life or the end of the well life. You don't need to, but you often culturally they do. Same thing with infrastructure. They'll have a contract, a 20 or 30-year offtake agreement or a contract, and they want to model till the end of it. Again, you all know something about finance, right? And if you know anything about finance, what can you tell me about the 20th year or the 30? Can someone type in, what can you tell me about the 20th year or the 30th year or the 40th year in the future relative to today, based on any analysis? Right? Based on any analysis at all, what can you tell me about? Yeah, it's not that the forecast is wrong. I mean, you can. Yeah, Ali said we're all dead. I agree, Ali. In 40, I had Ali. I had once had a client build a model that was 100 years into the future, and I said, really. Do you really need to forecast 100 years? You're all going to be dead. So you're right. It's a little depressing. But the reality is, distant cash flows, distant years have a very small impact on decision making today. The present value of future cash flows is very small. So listen, there are companies and industries, and I'm not trying to suggest we should change it, but my recommendation when you're building a long model is build a formula and copy it out. Build a formula and copy it out. So, and yes, it's not going to be perfect, but culturally, some organizations do it. It just gives you something to talk about and think about. So I don't have a problem with it, but you should know that there's no magic to going beyond 10 years. Some people just do it because that's what they've always done. Now, let me talk to you about the problem. So what we've said now, very simply, what we've said though, I love all the feedback. I love all the chatter. Keep going. What we said though, right? A model is just a 10-year forecast, a 5, 10, or 20-year forecast in the future. There's a problem though. The problem though is that most financial models are a mess, a total mess. So many financial models have errors and they don't work very well and they're hard to understand. Has anyone here ever seen an Excel spreadsheet a formula that was so long that it wrapped around and around and around? How many of you have seen a huge, long, crazy, big formula that wrapped around and it gave you a headache? and you needed to get a coffee, right? Has anyone ever seen that before? Raise your hand. True. Muhammad said true, right, Ali? Yeah, it happens, right? It's not optimal. It's not ideal. So my goal, Ralph, thank you, Ralph. Ralph is admitting that he did it. And you know what, Ralph? I bet you everyone in this room has done it as at some point, and you're the only one that wants to take ownership and admit it. So thank you for doing that. We've all done it though, and it's often a disaster, right? Dozens of nested formulas, models with 30 or 40 sheets, right? Difficult. So we're going to talk a little bit today about planning, about structure, about flow, and how to generate your assumptions so that you have a beautiful best-in-class model. Now, what I will tell you is this. Here's a key takeaway. So now you know that a financial model is just a forecasting tool, and I'm going to show one to you in a moment. I'm going to show one to you, but what I want you to know is that how do you know if your model is working well? It's how do you know if your model is working well? It's got to work well electronically. This just means that in the spreadsheet, the formula should make sense. Everyone should be able to understand every formula, number one. And number two, a good model needs to work well on paper. A good model has to work well as a paper tool. It has to feel like a presentation. I'm going to show that to you in a moment. So a good model has to work well in your Excel file. So if I build an Excel model and I email it to you, you should be able to open up my Excel model and click on every formula and say, yep, every formula makes sense. And a model has to work well on paper. I'm going to show that to you now in just a moment. I want to tell you a couple secrets. The first secret is this. The first secret is that a good model is much more than just a calculator. A model has to tell a story. A model is got to be a powerful communication tool. It has to know how to understand the inputs, communicate the results, and make people confident about the decision. Number two, I will tell you that financial modeling is, I believe, maybe the very best leadership development tool. If you ever want to get promoted or lead a company or a division or an organization, if you want to become a great leader, and I hope you all do, modeling is an excellent way to train you, to force you, to help you become a great leader. Because a person who can build a strong model knows this. A person who can build a strong model knows how to think about all the assumptions, do research to get all the data. They understand the presentation and the communication, the flow. They understand how the numbers all talk to each other and how it all comes together to make a powerful decision. If you can do all that, you are going to be on a very strong upward trajectory towards leadership in any organization. So let's now talk about, what I want to do now is I want to show you a model. I want to show you a model, and we're going to talk about it. And I will, yeah, and I love your comment, Mohammed, is, often models are a mess. Often they're a terrible mess. And he says it's a trick used by finance teams. Keep it complicated. Why? Why do we keep it complicated? To keep your job, right? Everyone thinks that if I keep it complicated, then I'm guaranteed to have a job. They can never fire me if the model's a disaster because I'm the only person who can use it, right? So it's a funny, people talk like that all the time. I actually think the opposite is true. I think that when you can build a model that's beautiful and organized and clean and tells a story, they are never going to want you to leave because you've got this incredible skill to build powerful, beautiful tools to help tell the stories. And will I share the question, Imran, will I share a draft of the model later on? Yes. It'll come your way after the webinar, and let's take a look at it then right now. So let's start by looking at, and I'm sorry, I got a bunch of things open here. Let's take a look. Oh, and I need to open one more thing here. Give me 1 second. Let's take a look here then at so as part of what we're doing at Financial Modeling Institute, FMI, at FMI, our candidates are expected to learn how to build a best-in-class model from scratch. And the exam is not a joke. The exam is a 4-hour exam where you have to build a full financial model of a company from scratch. Because once you can do that, once you can build a proper model from scratch and you can do it really well, and you've practiced and you've practiced and you've practiced and you know how to do it, you will never forget. It will be like riding a bicycle or driving a car. Once you know how to do it, you don't forget it. And so on the exam, the exam simulates real life. This is a sample model, Henderson. And on the exam, you're given a case study. And I'm showing you what happens in real life. We're being told that there's a company called Henderson. They're a manufacturer of storage tanks used by companies in the oil and gas sector. So they make industrial tanks. And the case study tells you all about the company, the model, it tells you the years, it tells you a little bit about their revenue, it tells you about their sales, it tells you about their costs, it tells you about the fixed assets, the capex. The case study tells us about the working capital, their income taxes. I'm going to get to that. This might seem like a lot. The debt and the equity, and then you are asked to build a model. And this is exactly what happens in real life, because in real life, what happens in real life is people do this. People download the historical financial statements of a company, right? In real life, people will download, so this is Henderson. This is the financial statements. They've got the historical income statement. They've got the historical cash flow statement. And I've got the historical balance sheet. That's it. That's it, right? That's all that's in here. That's the only thing in this file is I have the income statement, the cash flow statement, and the balance sheet. And in real life, that's how we start. In real life, you download the historical financial statements of a company. That's it. There's nothing else here, right? It's just the historicals. It's one sheet. And you, a good model builder, needs to know, how do they turn that? How do they convert that and transform that into a beautiful forecast? Because this is just the historicals, and I've got to build the forecast. Let's see here. Oh, I love it. I love this comment, Ali, right? So look at Ali's comment. I mean, on simplicity. Can I quote you on this, Ali, in the future? It says, if you can't explain it to a 6-year-old, you don't understand it. By the way, I've been a teacher. I didn't tell you much about my bio, but I've been teaching financial modeling for 25 years. My career's been in modeling. And I agree with you. Teaching, if you ever want to understand something, if you ever want to understand anything in your life, teach it to someone else. Force yourself to teach it. Start with a 6-year-old. I like to joke, Ali, when I want someone to explain something to me, I'll say to them, talk to me like I'm a Cocker Spaniel. Pretend I'm a dog. Just explain it to me in simple terms so that I can try and understand it. Because if I can understand it as a simple way, then it means you understand it quite well. And I love that comment. And, oh, it's Einstein. I'm going to pretend it's you, Ali. That's okay. That's okay. I'd rather pretend it's you. And yes, Nazmul, we will be sharing the model afterwards. You're getting quoted, Ali. You're getting quoted on all my future lectures, so be prepared for a lot of media coming to you for questioning afterwards. But the point is this. That's all we're trying to do here. We're trying to take a company's historical statements, and this is why this is such an important skill for all of you at any stage in your life. At any stage in your life, if you're going to be involved with businesses, you need to think about the future, because the future is how we make decisions about everything that we talked about. So you're going to need to know, how do you take historical numbers and build a beautiful forecast? So once again, in real life, you have the historical data and you have a case study. Well, in real life, you just have the information about the company. And what we need to know how to do is, I'm going to show you here, we need to know, how do we convert that into this? So this is the model. Now I'm going to show it to you, and then we're going to talk about some of the elements that I mentioned earlier. So here's the model. This is the model. This is the forecast model. So you can see here, this is a completed model. It says, oops. It's got my name. It's got FMI on it. It's got the company name. Very, very simple. I'm going to talk about the model flow a little bit more later, but this is the model. Now, we converted the historicals into the forecast. There's an executive summary. It's always important to have an executive summary up front. There is assumptions. There are assumptions. And then there is a page of scenarios, which we'll talk about. And then the model itself is here. Now, look what I've got. So now on the model, it goes very tall. I have a revenue forecast. Look, I've got a 5-year forecast for the company's revenues, a 5-year forecast of their costs. And now on the income statement, remember earlier I showed you that we only had the historicals. Well, now we have a 5-year forecast of the income statement, and we have a 5-year forecast of the cash flows and the balance sheet, etc. The balance sheet is here, along with a whole bunch of additional supporting calculations, supporting projects. Great, great. What about a greenfield project? Muhammad asks. Excellent question. It's exactly the same thing. The process is exactly the same thing. You just don't have any historicals to start with. So we have to, stick with me. The process of building the forecast is going to be the same. You just won't have any actuals. What you will have, though, on a greenfield project is other greenfields that have been done to benchmark reasonableness, to know, am I being reasonable about growth trajectories, operating efficiencies? If I'm building a greenfield, right? If I'm doing a greenfield wind tower project, then I don't have any historicals for that project, but I know what's reasonable in terms of cost structure, revenue growth, operating efficiency based on other wind tower projects that have come online in recent years, things like that. So you benchmark it exactly. But the process is exactly the same. The model will look exactly the same. You just won't have a few years of historical data at the beginning, but the forecast will be exactly the same. Now, so this is the model. I hope that just by looking at this model in Excel, in my spreadsheet, I hope you already feel comfortable with this file. It seems logical. I hope you feel that it seems organized. I hope you feel like it seems neat and presentable. I hope you feel like it looks like it's presented and formatted nicely. That's what the model looks like in an Excel spreadsheet. But I also told you that a good model has to work well on paper. I have to be able to print my model onto paper or onto a PDF. So this model has been printed to PDF. Look at this. It's 15 pages long. And I'm going to show you what it looks like as a paper tool. So here we've got a cover sheet. Look at that. There's a cover sheet. There is an executive summary. This is the summary page. It's a little small, but if it was printed, you would read it, no problem. Then I've got the inputs and assumptions. I've got the inputs, more inputs and assumptions. I've got some scenarios. And then we get into the forecast, the revenue forecast, the cost forecast, the income statement. And what I hope you realize is that it needs to feel like a presentation, a communication tool. Do you notice this? Do you notice that there's a title on every page and a subtitle? And I have something in the header. Do you notice that there's page numbers? Do you notice that there's a header and footer? Do you notice that the font is the same on every page? How do you feel? You've never seen these numbers before, but when you look at this on my screen, what does it make you feel? How do you feel or think when you see it? When you see that there's space at the bottom, when you see that there's a title, what does it make you think when the font is the same? It makes you feel like it's clean, 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 good, excellent. And now a good presentation, excellent, understandable. Help me out. What is your boss? If you share something with your boss that's clean and neat, what do they think next? If you show your something to your boss that's readable and that's clean and it's neat, Ali says he's going places. Well, you're already going places, Ali. I know you're going places. You're going big places. But exactly. Did you see what Eddie said? Here's what your boss is going to think subconsciously without you even making them think that. When you show your boss something that's neat and clean and organized, your boss is going to make an assumption, Eddie, right? That it's credible. Your boss is going to assume that you know what you're doing, that it's correct, that you are an excellent modeler, and that you, like Ali, that you're going places, right? And so that is very important. So how do we do that? How do we do this? How do we make sure that your boss and your client is super impressed with what you show them in Excel and as a PDF? They're going to love it. How do we do that? Well, oops, let me get up here. What happened to my chat? There we go. Yeah. So how do we do that? Well, let's go back to my notes here. I'm going to share my notes and I am going to share. So I will tell you, I'm going to, is so important. Planning is so important, and this is such an important part of the process. And what I will tell you is this: a model builder asks, a model builder asks lots of questions. A model builder asks lots of questions. I'll clean up the typos before I send this out to you. Builder, oops, where was it? Model builder. A model builder asks lots and lots of questions. The model planning is so important. And I would say spend a few hours up front in planning. If you should never ever just jump into your spreadsheet and start building and typing. You have to if you want a model to look professional and nice, like I just showed you, you have to think about planning. The planning is what allows you to determine your appropriate assumptions. So what are some of the things that you need to so we're going to talk about that. Model builder asks lots of questions like, why are we building this model? What decision? What decision are we trying to make from the model? Believe it or not, people often build models and they create things that they don't need. What decisions, right? What is the time period? Do we really need to forecast 25 years? Or is that just a cultural hangover? Is it okay to maybe do a 5 or 10 year model? And maybe the answer is no. Maybe your boss will say, no, we do still need 20 years. That's okay. Ask questions. You would love to watch me in an early stage modeling process. I show up and I ask a million questions, and I don't care if they think I look stupid. I need to understand everything, and I'm asking and asking a lot of questions. There's a hand up. Did you want to unmute? I see there's a hand up here from Morgan.
Yes. Thank you, Ian. I'm sorry to interrupt. I just wanted to use because you were on the time period point. How healthy would it be to consider adjusting the time period of a model going forward? So maybe today what we're looking to make a decision about is more relevant perhaps towards the next 5 years, but then later on, maybe we want to consider something that relates more to the next 10 years. Do we adjust that, or do we just add years?
I love that question. I love that question. I'm not gonna lie. I'm not gonna lie. Changing the model's periodicity and years later is hard. It's not easy. It's not easy to do. It often leads to mistakes. It can often lead to errors. You can do it. So what if I think what you're saying is what if we build a 5 year forecast and then later your boss says, you know what, we should really extend it out to 10 or 15 years. You can do that. It often leads to mistakes. I have to tell you, I have built over 100 models. I have been around thousands of models. I'm not sure that I've ever heard of anyone asking to change the periodicity after the fact, unless there's some reason. The reality is, if you do a good job and you decide, okay, we're forecasting 20 years for the life of the asset, or we're doing 5 years, you do 5 years. Now, the time period, it's hard to change later. Not impossible. It's not impossible, but it's harder to change later. But of course, what we do though, of course, in a good model, you need the flexibility to roll the model. Does everyone know what that means? What does that mean? Can someone type it in? But of course, we need flexibility to roll the model forward. What does that mean? Yeah, rolling the model forward, and I'm not sure if this is what you meant, means that right today we're forecasting 2026, right? Today we're forecasting from 2026. Look what I'm doing here. Right now, I'm forecasting 2026 to 2030 if I'm doing a 5 year model. But obviously, if I update the model next year, I need the ability to go from 2027 to 2031. That is important. That's necessary. We always do that. But it's unusual to say, you know what, next year, actually, let's decide to turn it into a 10 year model. I mean, you can, but I'm not sure that there's much I don't know that you'll see much purpose in doing that, right? You should be able to get whatever decisions you need. So let's talk about this. Yes, and I love all these. I'm going to come back to some of your comments in a moment. Some great comments around. I'll get to them in a moment. What I want to do is I want to finish a short discussion here on the assumptions. And what I encourage you to do is this: how do you determine the assumptions? Well, there are two types of assumptions, right? So there are two types of assumptions. There are two types of assumptions. I'm going to call them static assumptions, right? We only have one value. And then I'm going to say dynamic, which are scenarios. We have multiple options, right? So there are two types of assumptions: static ones where you only have one value, and dynamic ones where you have multiple options. How do you think about making the assumptions? Well, my strong suggestion is this. Look at the historical financial statements and walk down them. Meaning, right? Look at the historical financial statements and walk down the statements row by row. So as an example, let's go take a look at the historical, let's go back and take a look at the historical income statement. So remember, I am going to need to build a forecast, right? I am going to need to build a forecast for every one of these line items. So what you need to do as you're planning is say, okay, what do I need to do to forecast the revenue into the future? Okay, what do I need in order to forecast the costs into the future and the selling general and admin? And what do I need to forecast the depreciation and the interest expense and the taxes? You use the historicals as a guide to help you understand what do I need to forecast each of these items? And the same thing on the cash flow. Now, we'll talk about the connectivity towards the end of the webinar. But you go through row by row. Now, net income, as anyone who knows about model connectivity will know, well, on a cash flow statement, I'm not going to forecast net income. The net income on the cash flow is just going to be linked to the income statement. Of course, many items on the cash flow are just links back, so I don't need to worry about them. But what do I need to do to forecast the CapEx? What do I need to do to forecast the debt, the equity? So I would encourage you to go through the historical statements and walk down them. And then as an example, so if we're thinking about revenue, okay, if I want to understand forecasting revenue, what I will tell you is, and one of the things we talk about this a lot in the AFM program, I'm just going to scratch the surface here today. I'm just going to scratch the surface, and I'm going to end today's webinar. We're going to end at the top of the hour, and then I'm going to turn it back. I'm going to be here for another 20 minutes, and I'm going to leave you with a really powerful Excel idea. Just a tip. There's not a lot of tips in today's, but I want to leave you with a great Excel tip. Before we wrap up here. But how do I want to think about revenue? Well, one of the things we talk about a lot when people go through the AFM program is it's not optimal to forecast based on a simple growth rate. So a lot of people forecast revenues by simply using a growth rate. The problem is you don't understand much. You don't understand it, right? It's better to consider prices and volumes. It's much better to consider prices and volumes because then you have a much greater insight into what's going on at the business. So let me show you as an example here. So this is the completed model. This looks nice, this revenue schedule. It looks nice. I hope you agree. Because I didn't just use a growth rate. We considered, how do we think about the sales price of this company's products? How do we think about the sales volumes? My boss is going to have a lot of confidence. And then the revenue itself, look at the revenue itself. It's simply price times volume. It's very simple. The formula is simple, but the flow. And this only happens if you do strong planning. So ask a lot of questions. And this is the kind of thing where you'll say, right, how much detail do we need, right? More is not always better. More is not always better. Ali, can I quote you on that one as well? It seems like a nice quote, something you would say, right? More is not always better, right? Simple, less is more, Mohammed, right? So the point is we need to keep it simple. Now, not too simple, but reasonable so that you can have an intelligent conversation with your boss and with your client. You know what? Can I tell you a secret as well? I'll tell you a secret as well. It's in a model, it's always easier to add more detail later than to remove it later. Nobody wants to remove it, even if it's really weighing down your file. Nobody wants to remove stuff that they put in their file. It's much easier if you show your boss something simpler and they say, can we add a little bit more detail? That's great. It's much easier to do that. So the way you're going to do your planning, I used to spend hours in planning. If you have a strong plan, it will make it much, much easier to build the model effectively. So on revenues, think about how do I drive forward prices, volumes, and then of course, what about the costs? Well, here is I talk about this as well a lot in the AFM program. If you really want to understand how costs work, again, we talk a lot about it. But a cost, many people simply forecast cost based on assuming a profit margin. Literally, I don't know if you've seen that before. What people will do is they'll say this company had profit margin last year of 40%. So I will assume a 40% profit margin in the future. It's extremely common and I don't like it at all. I think it's really, really problematic, but people do that. What's much better? Much better to consider the fixed and variable costs. All companies have some costs that are variable and some costs that are fixed. So in the model, when you get it, you're going to see this model. We're going to send it out to you. It's really important to think about, and you'll only know this when you ask a lot of questions. Which costs are truly variable? And those costs have to get forecasted in a very specific way. And which costs are fixed? What does that mean? How do they work? How do I forecast them? Fixed costs have to get forecasted very, very differently than variable costs, but it has a big impact in the future when the company grows and you're trying to capture reality. So what I would say is your job as a model builder is to spend a lot of time learning, asking questions. How does the cost structure work? What's the right level of detail? What's reasonable? What's fixed? What's variable? And then be able to build all of that into. And so there's a good comment Ali said here. Challenge becomes translating the costs from external accounting formats into. Yeah, sometimes they're mixed. Sometimes you don't. So first of all, I'll put a note here. If you are working at or for a company, you will have access to this data on fixed and variable. You will have access to it. And if you are analyzing a public company, you may need to make an assumption on the fixed variable split. That's it. I agree with you, Ali. It's not always perfect. It's not always easy, but you need to do your best to make an important decision. And so my recommendation is, as we wrap up this, you need to understand, your job is to understand what are the assumptions going into the model. And so again, what I just talked to you about, how do you think about revenues? How do you properly think about costs? You have to do the same thing when you think about the fixed assets, the depreciation, the capex, the debt, the interest, the dividends, the working capital, the taxes. You need to ask a lot of questions because, again, the most important thing when you build a model is get smart. Get really smart, right? You need to get smart about the business, and then you will be highly respected on your team. So ask questions. What's the interest rate on the debt? What's the dividend rate? How does receivables work? How does the income tax rate work? Ask, do research. You need to do research. And how do you do that? Ask questions, do research. And that will get you great, great insights. So don't underestimate that. The reason why you liked the way my model looked is because a lot of time went into the planning it and thinking through. And then, by the way, the last thing to show you here is when you have all your assumptions, you will make an assumption page in your model, and you can put them in boxes. You can say, okay, here's a general box. Here are some equity assumptions. Here's some operating assumptions. Here's my interest assumptions, and just type them in. Make them very clear, make them clean, make them organized, and have them spelled in here right up front. Very, very nice. So the assumptions are here up front so your boss can see them very, very cleanly. Now, remember I told you that there are two types of assumptions. I told you that there are static assumptions. This is a static assumption, right? The interest rate on the long-term debt, 6%. That's a static assumption. I only have one option. I only have one option. I only have one option, but there are also what I told you, scenarios. And a scenario is, I also told you that there is a second type of assumption, and those are, we're here, right, dynamic assumptions, scenarios. We need the ability to change them. They need the ability to get modified because I don't know what they will be in the future, right? And so I'm going to share with you when you get my notes file. Oops. When you get my notes file, there we go. You will see that there's a whole section of notes on how to deal with uncertainty, because some assumptions are easy to forecast, but other assumptions are very hard to forecast. These ones change a lot. You don't know exactly what they might be, like inflation rates, revenue growth, exchange rates, commodity prices. And for those variables, you need to have multiple options, multiple cases. You want to have a base case, a best case, and a worst case. It's so powerful to have that. Every model you ever build should have a scenario page to capture the hard variables, the dynamic variables. And so I'm going to show that to you. So in our model, and that's why I like to tell people that every model you ever build should have a scenarios page. The scenario page here, let me move this, is simply a way of saying, okay, this is just more assumptions, right? This is just a page of more assumptions, and all that's going on here is we're saying, what is a 5-year forecast for the hard ones, right? These are the hard ones. I'm not sure. I'm not sure what cost inflation will be over the next 5 years. I'm not sure what the sales prices will be for the next 5 years. So what we do is step one, you have a big box where you have your options, and you will work. You will say, well, what do we think the base case is going to be for selling prices, for the price of gold or the price of oil, or for inflation? Step one is to determine what the assumptions should be. And how do you do this? Do some research, ask questions. All right. Ask questions, talk to your boss, talk to your team. Step one is to determine what you're comfortable with the assumptions being. And you'll notice that these are blue, and that's because they are assumptions. They are inputs, right? These are numbers that we just typed into a cell, and they are data inputs just like that. Very simple. However, I want the model to be able to run either the base case or the best or the worst. And so I need to have a switch. And step number two is to build a switch. This is just the number one. It's a switch in the cell. And this allows me to choose, to pick. Do we want to run the model? Look, when there's a 1 here, then this, step 3, you're going to see this in the model. Step 3 is the live case. This is the one that we are running in the model. This is the one being used in the model. It's the live case. And you'll notice that when the switch has a 1, the live case is the same as the base case. But if you put a 2 in here, now the live case is picking up the best case. And if I put a 3 in here, then the live case is picking up the worst case. And this is the one running in the model. This is running the model. The model is using the the live case, the skinny one here. So watch this. Do you see how now we're running cost inflation with the worst case assumption is going up here? Well, if I go to my model, you will see in the model that I have a note saying we are running the worst case. And you'll notice that when I am using my cost inflation, it's coming back to that scenario page and it's looking at the worst case. So I've got a very, very dynamic tool here that allows me to play with assumptions. And then what I want to quickly show you is the tool, the Excel tool that I wanted you to see is how do I decide which one should be running here? Don't use a long nested if. Don't use a long nested if. It gets long. And a much, much better option is to use this little choose function in Excel. It's a very beautiful or elegant tool. The choose function says, where is your switch? Where's that switch value? And then where are the choices? That's it. It says, where's the switch? And then where are the choices? So you can see here, oops, I just made a mess there. So I'm just saying, where's the switch? And then where's the choices? The switch is the first one. And then the choices are the three options underneath it. Very, very simple. So it's a very powerful, effective way. You could use, right? You could use an index, a function. You could use an offset. You could use an X lookup. But I like to choose because of what Ali talks about all the time. It's simple and everyone is going to understand it. So let's come back then and finish that topic. I want to wrap things up quickly here. So what we've talked about is I've talked about the fact that your job is much more than just building formulas. Your job is to understand. And that's, by the way, that's why I'm a little hesitant about the future of AI with model building. AI will be able to build formulas and tools, but AI can't put that information in your brain. AI can't make you smart. You're going to still have to learn the model. You're going to have to read the model carefully. You're going to have to know if it made mistakes. You're going to have to be able to check if it was reasonable about the way it did revenues and costs. So you have to understand it very, very well. Let's talk about flow and three statements and pulling it all together. And I just need a few more minutes on that. And then I'm going to let you go here. So now you've seen me talk a bit about model flow. And what we know is here is an optimal model flow. Every model can benefit from this flow. It's nice to have a cover page. The cover page sets the stage. It makes the model feel like a presentation. It's also very important to have an executive summary. I showed that to you. You saw that I had an executive summary. Many models do not, but it's so important because it provides the answer. It provides the answer right up front. What's the answer? And you have to customize it for your project, your industry, your deal. But it's important to have the executive summary. Number three, it's important to have assumptions right afterwards because the boss wants to know, how did you get there? The fourth thing is the scenarios because that allows us to manage uncertainty. And then finally, all the calculations are on the engine. So this is optimal model flow, but you already saw that. Let's go back and look at the model. You already saw it here. This is how I would encourage building any model, with a cover sheet to set the stage, an executive summary that's customized for your model, assumptions, so where you did all your research and you entered in your data for how does revenue work? How does costs work? Right? How do the costs work for this company? How does the depreciation work? How does the interest work? You researched and asked questions, got data, and you built up the assumptions page. There's scenarios. And then finally, the forecast, the engine is right here. And that is exactly what is going on. And then finally, what we're trying to do is pull it all together into a cohesive set of financial statements. And I want to share with you one comment on the financial. And yes, I see a great comment. I want to see something. Great comment by Gassan. Absolutely. Model, he says, the best way to learn how to swim is just to jump in the water. Well, you're absolutely right. Well, actually, I would encourage you to take a swimming lesson first. Take a couple swimming lessons and then jump in the water. The only person who can make you a good swimmer is you. I agree with that, Gassan. And the only way you can make you a strong modeler is you. And so today I'm showing you some ideas and tips and it's over to you. I hope that you work and become a strong modeler. The best way to do that is to join us at FMI, because it forces you to learn, because you're going to have to you will have to work really hard until you can build a model like this and prove it on an exam. You're going to build it from scratch like this on an exam, and then you'll have incredible skills. But our job, right? Your job is to ultimately pull it into the set of financial statements. I'm going to leave you one last tip, and then I'm going to wrap it up. Is one last thing is this. Here's the secret of the financial statements. Remember, I showed you last comment. I'm going to wrap it up here. Remember, I showed you that we start with the historical statements. We start with the historical financial statements here, and we have to build a 5-year forecast off to the right. Well, the secret I'm going to tell you is this. In any good model, there should be no big formulas on the financial statements. They should just be links. This is the secret to building a strong model. We go through this in great detail in the AFM program. Is watch this. How do I get revenue on my income statement in the future? There's no formula. There's no formula. It's just a link. And what we've done is we've linked it to the work above. K26 is coming up from above me. It's right here. It's linking to a revenue schedule. The work. So what you do is you do your research, you build your assumptions, you build your calculations on schedules, and then once you have a schedule, like a revenue schedule, you simply link it in to the financial statements. Look at the costs. The cost on the income statement, the cost of goods sold, is not a formula. It's a link to the bottom of a cost calculation, a cost schedule. We build a schedule. You do your thinking, you do your work, you do your calculations, you get to a total value, and then that total value feeds into the financial statements. This is the most elegant way, the most powerful way to build any financial forecast, any financial model for any company, in any industry, in any country. And I will tell you that if you look at my lines, they're simple. Every row, of course, is linking to a depreciation calculation. The interest is linking down below to an interest calculation. The income tax is linking to a tax calculation. So I wanted you to see that before I turn it back. I wanted you to see that because today I wanted to talk about the discipline of really powerful, strong modeling. And you're right. It is a skill, like swimming, like playing a sport, like playing paddle. You guys probably play paddle, right? My friends out in the Gulf in the Middle East play a lot of paddle, or however you say that. It's like learning to play guitar or piano. You take some lessons, but then it's on you. You have to practice. You have to do the work. You have to get there. And we've got a great way to help you get there. I'm excited for you. But what you see is modeling is all about the design, the planning, understanding how to get to the forecasting data, and knowing how to tie it all together into an integrated state of financial statements. Because as I talked about already, once you've done that, you have an incredible tool that can allow you to make beautiful, coherent decisions. So on that note, we're at the top of the hour. I'm going to send my files through to Morgan, and they're going to send them through to you. You're welcome to connect with me on LinkedIn or to follow on LinkedIn. If you have questions, send them to me or to Morgan. And I hope to see some of you. I really hope we can help you become exceptional financial modelers. So thank you for being here today. I'm going to jump in a few minutes because I actually have another webinar in the UK that I have to go to. But let's just see if there's a few questions here. And then, yeah, let's see here. Do you need to be let's take a few questions. Imran says, do you need to be a master of Excel? No. No. You do not need to be a grandmaster in Excel. I do not want people using the most complex, complicated, difficult functions because your boss won't understand those. Your client won't understand those. You need to be pretty good at Excel. You need to be comfortable using the keyboard. You noticed I was using the keyboard. You need to know how to navigate. You need to how to use some pretty basic functions, but model builders do not need to. It's nice to know them, but I encourage you to refrain, to avoid some of the most complex Excel features. The only reason you should know some of the crazy features in Excel is if someone else uses them in a model and you have to understand them. But no, you do not need to be an absolute grandmaster in Excel, not by a million years. The recording is going to come. Can we please organize future sessions for on AI in Excel? Sure, we can talk to Morgan about that. And yeah, you can see my name is in my LinkedIn. You can find me on LinkedIn. My LinkedIn ID. Ooh, where's my LinkedIn ID here? I'll toss that into the chat. Is there any other questions that I've missed that you want that we should have?
Thank you so much, Ian. You actually pretty much covered every question that was in the chat.
Okay. Great. Then let me post in. I'm going to stop the share. I'll turn it over to you, and I am going to put my LinkedIn here into the chat so that everyone can see. Where is my? Let me quickly put in. Here it is. Okay, so I'm putting into the chat here. Where's the chat? I'm going to put in there it is. I just tossed it in if you're interested in it. My
Awesome.
LinkedIn. And by the way, if you go to my recent posts and you scroll down, and by the way, I just got back from a great trip to China and Japan. I hope to get back to the Middle East and the Gulf. I think I might be in April. I have to figure that out. But if you scroll, I mean, I love doing things online, but I also love doing things live. Check out what we're up to. I think you'll find it exciting. But if you scroll down just a little bit, you'll see how to find our Mod Squad podcast because we're doing a big one tomorrow where we test Claude. So I'll stick around for a few more minutes, but I know you wanted to chat about a few things as well.
Thank you so much, Ian. Yes, it's always appreciated to have you. Everybody always gets a lot of benefit from what you have to offer. I just wanted to make sure that everyone is reminded that we will be sharing a link to the recording of this session for all who registered and attended. They will receive the slide deck that I will go through in the next few minutes, as well as the documents that you will provide with the Excel files and your notes on them. For those asking about more details about AFM, we're going to go through the AFM itself with FMI, all the available resources in just a minute. And we will also, for someone who asked about the previous webinar, I can't promise that it's still available online, but I will double check if there's a way for us to give you access to review that as well. It's slightly old, but we'll look into that. All right. Thank you
So
so
on
much,
that note,
Ian.
I'm gonna leave you. I'm gonna drop and let you finish off because I need to get to the UK. But thank
Thank you
you
so
all
much.
for your time today. Stick around for a few more minutes to learn about how we are partnering with Morgan, and I'm excited to be back in touch with all of you. But have a great rest of your day. There I am. I'm leaving, but you'll get my face in case you miss me so quickly. But thank you all, and look forward to seeing you next time. Okay. Thanks for
Thanks, Ian.
Take
Amazing.
care. Thank you. Bye bye.
So, for everyone who's still with us, just a quick overview of who we are as Morgan International. We've been in the certifying business for the past 30 years. We do provide professional certification trainings, industry-specific workshops, and definitely upskilling. We've catered for some of the biggest companies in the region and across the globe as well. So, the advanced financial modeler that Ian has been demonstrating today is the standard for financial modeling. So it's the FMI itself is the only institute that accredits globally recognizable certification in financial modeling. So you will receive this slide deck in its entirety as PDF after this. So if you register and when you register with Morgan for the financial modeling certification, the advanced financial modeler, you will have access to a lot of resources. The AFM itself is comprised of 10 modules, most of which Ian has been mentioning today. I mean, you have the introduction and then how to build the front end, revenues, costs, depreciations, taxes, working capital, capital structures, financial statements, and of course, outputs and troubleshooting. As he said, AI can help you build a financial model, but if you don't know how to troubleshoot it, you will never recognize any mistakes that are within that financial model. So who it is for, like if you're still a finance student, if you're a manager, if you're an accounting professional or a finance professional, you will benefit from the AFM in itself. When you register register, you have to pass an exam. So when you study all the available resources that we will demonstrate in just a second, you will have to pass an exam. It's a 4-hour exam where you will be given a complete scenario with details and financial statements, and you will have to build a complete model from scratch to pass the exam and earn the credential. So when you register, you have video tutorials, you have study content, you have practice models, you have mock exams that you can actually try with models that you need to build through assumption. You have a lot of supplementary reading, and you have exam readiness support as well from Morgan International and FMI. So as mentioned, it's a 4-hour exam where you build a complete model as demonstrated by Mr. Ian from scratch. So the value of the AFM is to demonstrate that competitive advantage. A few tips on how to actually move forward with the exam. And then if you're ready to join an AFM class and become a certified advanced financial modeler, we have offices in all these regions. And in the slide deck you will receive, you will have a link to chat with our team members and advisors. You can email us, and you will have our phone numbers with WhatsApp available for quick correspondences whenever needed. So if anybody has any additional questions, I'd be more than happy to answer. Yes, Deepak? You can go ahead and unmute if you want. Okay. All right. So again, I'll thank everybody for attending. I hope you found the benefit we were aiming to give you in this session, and how to actually consider a financial model, how to look into it, how to consider the assumptions. And yes, Mohammed, we will be sharing the entire slide deck, so you will receive the contacts page again. If you want to take a screenshot before we go, this is the contacts page again. So thank you again, everyone. Like I said earlier, we will be providing you with a link to review this session. We will provide you with the slide deck in PDF, and you will be receiving the Excel files Ian was sharing with his notes included. And I have an additional piece of exciting news, that you will also be receiving an access to activate a trial account for the AFM. So it will give you a good taster of the modules within, what you will be learning within, and some of the available resources. So it's a trial access that you will receive a link to activate, so that you can also look into it. We will also later be sharing our upcoming class in April for the Advanced Financial Modeler certification, should you be interested to join that as well. Thank you, everyone, and good luck.